Good morning, traders. Welcome to the Flow Show, 22nd of April. And we're all ready to have another crack at markets again this week. Quite a few things coming up that we'll be discussing shortly. Morning, K-Man. Have a good weekend.
Good morning, Ryan. Good morning, everybody. Yeah, decent weekend. Didn't do much, actually. Was very, very quiet over the weekend. Watched some football, watched some cycling, watched some motorsports, and that was mostly it.
Yeah, these weekends seem to be going too quick as well.
A little too quickly, Bryce.
Sorry?
A little too quick, yeah, for my liking. I very much like the proposals for doing 4-day weeks. Add one to the weekend, mate.
I'd rather do the other way, 4-day weekends and 3-day weeks.
All right.
Can't have it always. Can't have it always. Right.
To say for that.
Yeah, exactly. Okay, let's get stuck into it. We'll start off with the Bank of Japan, seeing as we've got them on Friday. The Bank of Japan will raise rates again this year, say 2/3 of economists in a Reuters poll. However, none of them know when they're going to do that, though. None of them think that they will be hiking by June, and only a third thought that they might be hiking in the Q3 quarter, and the rest are all over the place and that. So hikes to come, apparently, but no one knows when. Maybe that'll get cleared up on Friday. Over at the Bank of England, BOE's Ramsden decided to give the pound a good kick in the gonads on Friday afternoon, and by saying there's likely to be bumps in the disinflation process from 1 month to the next. And over the last few months, he has become more confident in the evidence that risks to persistence in domestic inflation pressures are receding, i.e. seeing inflation pressures easing. Says the balance of domestic risks to the outlook for the UK inflation is now tilted to the downside. It says this leaves the UK as less of an outlier and more of a laggard in terms of recent inflation performance. It says inflation staying close to the 2% target over the whole forecast period is at least as likely as the February forecast. It could do more. It says the labour market has clearly continued to loosen. Can be confident that headline CPI inflation will fall sharply in April to close to the 2% target. A very strong comment, that one. Not that inflation could fall closer to target. He's gone out there and sent his stall out that inflation will fall sharply and will get close to the 2% target. He's also joined the other central bank squawkers who are bringing FX into things at the moment by saying we will take account of FX implications for inflation. This morning, UK interest rate swaps show a first 25 pip cut from the BOE is fully priced for August now versus September before his speech last week. A very dovish one, K. He's really taken it to the quid at this one. Is it? Has he gone a bit too far, or is he justified, do you think?
It's a strong call, right?
Yeah.
But he's joining somebody else, and I was trying to think about who it was that was also saying that the next print would be lower, and I'm starting to think it was Bonkers Bailey himself.
Yeah, Bailey said it a few times because of the energy price cap thing.
Yeah. Well, when I read it, I wasn't on the desk on Friday afternoon, but when I read those comments, first thing I was thinking about was, is he pissed off at what Bernanke said in his report about mistakes and things like that? And he went like, well, yeah, well, let's give it a kick in the nuts here. It's a very strong call. It is, let's say that what we saw over the past numbers, it is going to probably take the direction, but if it's going to go as far as he says, I doubt it, to be honest. We still see some the wages holding up. I wouldn't say that they create fresh pressures, sorry, but we see them hold up. Now we will see the next round of data, especially on the wages as well, because we had in the UK, it's bonus season, right? In February, some as late as March. So I think the next numbers will perhaps tell us a different picture. But I'm pretty confident in saying that he hasn't seen those numbers yet, because they're simply not out yet. It's a very bold call, and we've seen the reaction that the market has towards the sterling once more. And I've been saying it many times already on our chats here together, saying that the market is quite emotional about sterling every time when the thing gets rolling. And we saw a big response. Euro sterling is 70 pips higher. Cable lost a big figure. This is how the market treats the sterling, and dare I say, especially on the downside, when it comes to selling sterling, the market is always looking a bit more eager to do so. Yeah, he threw the cat amongst the pigeons, right? And several cats at the same time.
The whole category.
Yeah. The call may end up being too bold, but if he's right, and if we even take the direction in a more pronounced way, we are seeing the market is now starting to reprice the sterling expectations. There is room for more repricing, right? Because the pendulum had swung to the other side. The pendulum had swung to less cuts further away, and all of a sudden the market may decide to bring those cuts forward again. And why not? If August is priced in, I don't know how much. I haven't seen the numbers, but I don't know for how much June is priced in. But they are meeting a good week after the FOMC, 2 weeks after the ECB. Why not? You know, the market's starting to price in June all of a sudden again.
Yeah, and the interesting thing is he says he's been seeing this stuff since February, yet he hasn't voted for a cut in any one of the last meetings. Dhingra has been the only one voting for cuts. So this has got to mean that he's going to shift. The next meeting is May 9th. So he's got to shift, and he's not even getting another CPI report to confirm that call about those inflation numbers. So, yeah, we would have to think on the basis of his comments that we will get at least 2 voting for cuts at the next meeting. But if it's still only the one, and he himself hasn't voted for cuts, that's going to look a bit strange, isn't it?
Oh yeah, it leaves the door open for more pendulum swings, misaligned expectations. It does leave the door open, but we are more than 2 weeks away from those from the next meeting in May. By the way, I don't expect anything in May. I don't think that Bank of England is in a position to start cutting before at least ECB or and the Fed, right? Well, the Fed remains to be seen because they keep on pushing out stuff. But I think also the reason why cable, for instance, has had this knock on the head is those expectations for the Fed as well now being pushed back. We're trading back at 5% in the 2s, 4.65 in the 10s this morning. So that is an additional weight around the cable's neck. But yeah, I mean. So far, who was it that was voting for a cut? Is Dhingra still there?
Dhingra, yeah.
But I mean, you know, if the balance can actually tilt even further, imagine that Bailey for once puts his money where his mouth is. We could be as far as three cutters coming.
Yeah, that's a fair point. I think that's a fair point. There's going to be some risk to this meeting because it's the next forecast meeting. So that's going to be very important. As you say, likely there won't be any action, but it could be a teeing up meeting, as we heard from other central banks that like to tee these things up. And a forecast meeting is the one to do it. But there might be some very small risk that the market gets a little bit too dovish going into that one. if we keep seeing what we're seeing at the moment. But yeah, that's not till the 9th of May, so plenty of water, plenty of data to go under the bridge, and we'll look at some of that data coming this week shortly. Right, moving on to the ECB, and it's still floodgates from that lot. ECB Simcus says they could make back-to-back summer rate cuts. 3 or 4 rate cuts are possible this year, and that the quarterly projections will form the basis for a cut, as they always do. ECB's Wojcik says prolonged jump in energy prices would move inflation. ECB can move first, but Fed divergence would be felt. He said disinflation could hit a virtual standstill mid-2024. ECB's Wunsch says doesn't have a base case, but very unlikely ECB will only cut by 25 pips this year. Would not exclude a rate cut in July, but it's hard to forecast that now. The July meeting will give a signal on the rate path. US Eurozone economies have decoupled, and the gap between ECB and Fed rates could widen. ECB's Nagel's not ready to give in to the doves just yet. Says rate cuts in June are possible if the outlook holds, but it's absolutely premature to discuss the rate path beyond June. ECB's Muller sees a few more rate cuts by the year end after June, if economy is in line with expectations. One of the important reasons why July is such a hot topic as well is because they all bugger off on holiday after that meeting. So we enter the summer break, Parliament shutting down, ECB shutting down. So that's why they want to potentially signal at July what the path is going to be for the rest of the year. Over to the Fed, and Goolsbee is still spouting off about everything that's going on. Says it makes sense to wait and get more clarity before moving. Talking about cuts, obviously. It says inflation over the last 3 months cannot be dismissed, even though he was one of the ones dismissing it in January, February. It says inflation progress has stalled this year. The Fed needs to see if strong data points are pointing to some overheating. And on possible rate hike, says he doesn't think anything is not on the table. Then he speculates that a global rise in inflation would suggest it's driven by supply shocks or other things. Then says it's unproductive to speculate on conditions for raising or cutting rates just after speculating on all that. Bank of Canada's Macklem says he's wary of upside risks jeopardising the inflation process or progress. Over in the autos sector, we're keeping a bit of an eye on. Telsa are going to recall just under 4,000 cyber trucks due to an accelerator pedal problem that comes on the back of Ford last week recalling a huge amount of vehicles as well. Not a lot else on the headline front. Kay, you got any bits and bobs or any comments on those ECB squawkers?
It does feel that they've been quiet for a long time, and now they are back out in force, the doves. That it does all point at them okaying to let the hawks keep in charge for a good while, but now, especially Villeroy has completely changed since the start of the year and now, between the start of the year and now. De Guindos was very quiet as well. Now he also starts to say that it's time to go, and we have seen that even the hawks are giving in now. So apart from some nuances, let's say. So yeah, we are heading. I mean, now the ECB would be a real surprise if they don't cut in June and signal the start of a cutting cycle. Of course, they're all mentioning the geopolitics, and that's a bit in line with what Goolsbee was saying as well about the supply or other things. It's quite funny, that line as well. It could be driven by supply or other things. Can you be a little bit more specific, please? Because other things may mean anything. No, but yeah, I think for the ECB, it's also, I think the aim of Lagarde is to avoid shocks, right? So I think she's trying to get everybody on the same line, and that seems to kind of work. She's talking this afternoon somewhere. I think she's I don't recall exactly where it is, but I've seen somewhere that she is talking this afternoon. But yeah, she's probably not going to steer too far away from this global line that apart from shocks they're in for June. On the rest, well, the Fed speakers, Goolsbee was the last one then to be able to chat before the shut up period, right? I don't think he has a very clear view, to be honest. Anything can happen in his scenario, but recalling how he was at the start of when he arrived, I don't think he's a hiker. He's rather going to look for things to smoothen down and align with the rest, later. But still, the bar for hike is going to be very high. The other thing I read this morning in the news is that S&P is going to ask to hike the reserve requirements and to put that in place for the 1st of July. So there may be some kind of flows attached to it, because I think they're raising the bar from 2.5% to 4%, if I read that correctly. That could somewhere, but it's still like we're still April. If it's 1st of July, they still have like 2.5 months or so to, or 3.5 months, 2.5 months.
Yeah. Funny you say that. Headline just popped up saying that Swiss banks face a $440 million hit on those higher S&B reserve rules. So if it's going to bring any inflows, that's not a huge amount.
Yeah, because the reserves are not remunerated at the S&B, even though there is a tiering system, but I'm not even sure if they still apply the tiering system or just put everything at zero right now. Yeah, that's going to be a bit of a hit. I mean, it's always a double-edged sword. The manipulating the reserve requirements, because you hike it, that means that the banks should be making less profit, those who are based in Swiss franc at least, or who want to trade in Switzerland. They will still be even the foreigners, I reckon, they will still be having to respect those rules. So I don't know if there's any flows or a lot of flows to be done on the back of it, but it's going to be over time. So that is perhaps just something not for today, but just a flow here and there to take into account.
Yeah, maybe a bit of limited impact as well. Right, so let's have a butcher's at what's coming up this week. It's not the most busiest of weeks, but there are a few bits and pieces to get our teeth stuck into. Starting tomorrow, tomorrow we get all the first runs of the PMIs coming through for the new month. So that comes through. Oh, I've got to mention that China kept their LPR unchanged, both numbers unchanged. So they're not doing anything on rates yet again. But yeah, all the PMIs start off tomorrow. We get new home sales as well tomorrow from the US. So keep an eye on that one. We had a couple of wobbles in some of the housing numbers of late. See if that continues there. Wednesday, we have Aussie CPI, which will be obviously closely watched for RBA implications. Germany's IFO numbers. Then US durable goods. Again, keeping an eye on that the consumer aspect of that number. Canada retail sales ends the data for Wednesday. Thursday, not a lot going on in Europe. US GDP is probably the pick of the bunch. The first Q1 numbers dropping for that, expected in at 2.5% for the initial read versus 3.4%, I think it was, Q4 numbers. So the market will be wanting to know exactly how good the economy has been in the first quarter of the year. Now, those numbers contain estimations for PCE. Obviously, we know the PCE for January and February, but we haven't had the most recent PCE numbers, which drop on Friday. And I'll never remember whether those numbers are actually known for the GDP, or whether they estimate them or what. So just watch out for the PCE numbers in this first print for GDP, in case the market is extrapolating it to what the numbers are on Friday when we get those actual monthly PCE numbers. On Friday also, it's BOJ day. We also get the Tokyo CPI data dropping a few hours before that. It's expected to fall, the core CPI is expected to fall to 2.2% from 2.2%, which I think is either second, maybe the third month where we've seen that coming down. So that number we watch closely, because if it worse than expected, that might get the yen flipping around ahead of that BOJ meeting, where we should find out what they're going to be doing, how NERP has gone so far since their change, and maybe some comments on what's to come and when it's to come. A lot of talk has grown at the BOJ about FX implications as well, and them using policy if they deem that FX is going to potentially impact inflation. So even though it's going to be a zero expectation for any action at the meeting, the comments are going to be important for how they move forward. What do you see the risks are for that one on Friday, Kay?
Well, as I've been saying, I think base case 95% chance that they don't do anything, because they went before the end of the fiscal year. It's the first meeting of the fiscal year. I had penned that in for them to move this month, but they did it already. So base case is for no move. But as Ueda himself has already been saying about the impact on inflation by currency moves. We can't completely rule out that they at least say something, and I'm going to keep that 5% open for them to surprise the markets completely. Although Ueda is not the big reformer, but the smooth sailor, it seems. Since the start of his tenure, I'm still going to leave that very small percentage open that they come up with a surprise, especially that MOF has been surprised, to say it very gentle, to nicely, about the reaction in the market post the Bank of Japan meeting. Not us, but yeah, they are. So perhaps, we just leave that little bit of percentage open in case they would really come out and surprise the markets.
Yeah, I think you're right with that. If they don't do anything, when should we really expect a hike? Another one.
Well, the market is expecting that they will start to move in our Q3, their second half of the fiscal year. So that brings us to the meetings in September or October. Some say even the last meeting of the year, but I'm personally, I really think that they are not going to wait until then, and we may even get it before, especially if the yen continues to be weak, right, against virtually all currencies. We of course, with the move in the sterling yen is down, but it's the only currency, the only pair that is down, like versus the yen, right? If you look at all the rest, it's still very, very weak, the yen, and I do think it can push them over the edge, and so I would pen a possible hike for earlier. And there is this meeting in July where they have the expectations and projections and stuff coming out as well, and an outlook report. 31st of July. I think that may be perhaps then a better one for them to act. I don't think that they will wait until the second half of their fiscal year if the yen is still weak like it is.
Yeah, thanks, mate. And I think, do you think their mind will get changed if we've busted up through this 155 before Friday? Let's say we smack that through and trading up their 156. Might they decide to go a bit stronger on their language with all this FX chatter? Because it seems like now we've got two-sided risk. You obviously got the MOF intervention risk, and now we've got the BOE, the BOJ monetary policy intervention risk?
That's what I'm saying. I wouldn't rule it out. I bought downside for the Bank of Japan meeting, just in case that in between MOF decides to intervene, a bit long dollars elsewhere. But I bought some downside $yen. It's still one of those cases where if nothing happens, this thing is going to trade 156, and why not 160? You know. But I'm just hoping that we see an intervention first to pick him up lower. And yeah, I wouldn't rule. It can push them over the edge, this move, if we are above 155, 156, because if it would be how shall I say, totally if the economies would be okay in Japan, really okay, they would actually, I would actually put it at 50-50 even. But we've seen the economic data very uneven, right? They come out quite okay one month, and then the next month it's going back down. But current account, I think, is remaining positive. So that adds perhaps to the possibilities, you know, that they really go. That's what I'm saying, and I wouldn't rule it out. I wouldn't rule out any meeting from now, really, depending on what happens with the yen. Friday could be very hot. Imagine a slightly sticky Tokyo CPI, a bit of a more hawkish Bank of Japan, and dollar yen trading at 155.5. I think on Friday it could be really bingo. You know, the interventions. That would be a very, very hot day this week for the yen.
Yeah, or conversely, imagine that Tokyo core CPI comes in at 2%. 3 hours before the.
Then it's a mess. Then the only thing left are interventions. Yeah,
I think that could be a time where you see a break if that's a really soft CPI number coming right on the BOJ. Anyway, that's for Friday. Plenty of time to chew over that one further as the week progresses. Right, so we got dollar yen. It's turned into another bit of another 152 at the moment. Obviously not as much history up here as in terms of recency that we had at 152, but this 154, 70, 80 area seems to be where we're parking up the bus ahead of that 155. I haven't heard anything as yet, but there's likely to be some more barrier stuff going on there at sort of a big half figure as it was at 152, but we'll wait and see for any confirmation of that. Yeah, we're gonna see how that progresses through the rest of the week. It's going to be an interesting one. Now,
while you're on the dollar yen, Ryan, if I may, Ali is asking, and let's straight away reply to the question there. If you're long on the dollar yen, what's your target above 155? So I've got this extension level at 155, comes in at 08, but the thickness of the pencil, put it at 155.10. And above there, it's only really 156, and then I've got absolutely very little before we talk about 159, 160, Ali. Okay. That's really the levels. Above there is very little. Okay.
Yeah, I've not got a lot either. Even up here through that 155 area, got a bit of traffic, like you say, around there 155. But otherwise, it's 160 for me up there. That's going to be the next big level. Should we get there? But yeah, and we shall see what happens. There's always two-sided risk to this one at the moment. Right, so I was going to have a quick look at the euro. Two things with the euro. One, it stopped going down, and two, it's not going up that much. So this one looks pretty straightforward still, as it was last week. 106 is your downside, 107 is your upside. It's going to need a move through either of those really to potentially get this moving in one way or the other. Otherwise, we're going to be sitting bang in the middle here, waiting and watching and probably reacting to the data. There's nothing really more we can trade on the ECB side. You know, weak data is not going to change the June date, that a cut is coming. It might get the market, you know, pricing more cuts. If anything, if we get weak PMIs from the Eurozone, we know manufacturing has been improving, but it's remained in negative territory. Otherwise, yeah, it looks like this one is just a wait and see game at the moment.
It's a tool. It's a tool to do all the rest. And
yeah,
out of experience, I've been working in banks for long enough and trading currencies. This is one of those periods where you look at the crosses, they're on the move, and it's a bit of a pushing and pulling. For instance, the euro yen is still bid, the euro sterling is bid, but then you look at the euro antipodians, you look at the euro Canada, for instance, they are rather offered, and the euro dollar is trading in between. It's just a tool to do all the rest, and we are hanging in between those levels, as Ryan said. And we need really to break out of them before we take a direction, and then we see why we take this direction. On the globally, I would say I'm still a little tilted more to the downside just because of interest rate differentials and expectations, ECB versus the FOMC right now. But flows are flowing. If there are no flows to take it lower, and if those cross flows are keeping it up, there is absolutely nothing to trade in there for now.
Yep, very much. And Angela, yep, euro sterling was where I was going to go next. Oh, euro sterling, not Aussie dollar. As we know from this one, it can bore you to tears for days and days on end, but then when it wants to move, it can move, and we're getting a bit of a move now. It's got through the 86 level, above 86.20 now, which is one of these on-off areas. My zone's next, 86.45 up to 70. That's going to be a bit of a pivot area. There's times we've had a little look above, can't hold it, tried to hold it, can't hold it. So that's probably going to be the sort of area where this thing will finish its repricing from the BOE. But there's always a risk of a snapback. If Ramsden has got the market running too far one way, and that's not going to be the case at the next meeting, we could be just as easily back down to 85s, 85.5, down to all this low traffic down here. As you know, I've been planning it off the 85, so I've taken a bit more profit up here, put a bit more in the bank, still keeping the core long. But I think, yeah, the trouble area is going to be here up in this 86, call it 86.5 area, and we'll see whether we can chew through that. It's going to take a bit more on the ECB side and a bit more on the UK side to get that moving. But as you said, you know, euro dollar is doing nothing while euro sterling is moving. It tells you exactly what currency is making the move here. It's certainly not the euro. It's sterling doing all the pulling and pushing on this one. Going to look at gold. I know everyone likes looking at gold. A bit of a miss the boat trip here. I was feeling this morning, well, yesterday, I was thinking about maybe seeing if we're up near 2,500 and giving it a little tap for a short, but coming in this morning and seeing this a bit lower. I think what we're seeing in the early part of this morning is just a bit of maybe some relief that no poo hit the fan over the weekend. Stocks showing a bit of recovery as well in that, oil lower as well. Now, so the question with gold is, you know, what has been the main driver? All this hasn't been just risk. We know it's been moving even without risk headlines. So the question is, yeah, we might be getting some risk noise in here, but is that going to affect the whole trend? Are we going to see a bigger dip, or are buyers going to start coming in and picking it up? The buyers who were buying it without the risk influence or without a care for the risk influence. So I think that where we dip to here is going to be quite important. This 60 area, I did have a bit of a line in there. I don't know where that's disappeared to. Let's pop it in now. Come on. Whack it in there. That'll do. Yeah, this 60 area looking like it might be a little bit pivotal around here. We've had a couple of little knocks underneath. Called it. I've got it mainly down at 65, round about there. That'll do. We've had a little move under. We're just trying to hold under it. So this is looking a bit intraday or short term, a bit more bearish. We can't crack on through that 2400 level. These two moves through here came on those risk headlines, Iran and Israel, and soon fell back under. So you've got to really sort of half ignore those at the moment. 24 is still the big level that we just can't get above and hold above. So if we break there and then we knock out these highs, then we're probably off to the races again. But for now, maybe we're just going to see a bit of easing down in that 2320s is probably going to be an important level to keep an eye on. But while we're hold below this 65 area, maybe we'll get a little bit of a push further down in that one. Stocks all over the shop again today. Oh, click, click, click. I said on Friday that this 5k level might be a bit significant for the bulls and the bears to see who got their close on their favoured side. It looks like the bears are winning because we're keeping below that 5k level at the moment. And while we do that, that's going to keep this bearish pressure in play. Some of the levels, I've pulled up quite a few of my lines off the chart just to clear it up a bit. This big area is still going to be the significant one if we get down there, the fib and that former break point at 48. But if we hold below this 5k, we might be on for a push down there. But if we find we're creeping back above it, then maybe the dip buyers are going to start coming in force again, and we'll see some of those sellers turning tail, and we'll see where they want to take it to. As always, keep an eye on yields. They're holding up pretty well. 2-year yields in the US, which has been tickling this 5% area, 5.01%. We're still sitting up closest, not seeing a break though. And that's might be significant because if we get through there, US 10's also holding up near the highs. If we get to fresh highs, then that might be the kicker for the dollar to move again, and we see another leg up, and that'll probably be a bit of a domino effect for a lot of pairs like euro dollar, probably then going through 106. What are your thoughts on yields here, Kay? What are we trading here at the moment? Is there still some risk easing going on in yields, i.e. no rush to treasuries for safety, or are we still trading this higher for longer scenario?
Yeah, I think we're trading the higher for longer scenario. We are constantly on the lookout as well of what the US Treasury auctions give. So they are this kind of natural thing that I wouldn't say is a reason for bonds to sell or to come off. But they are just keeping this. If you keep the supply of bonds open, we still have a pretty decent week this week on the auctions front. All else equal, unless you get very weak PMI prints, lower PCE print at the end of the week, there is very little reason that yields should materially come off. But I have to add that in the meantime, we have seen the past couple of weeks, those auctions have seen some decent take up. So there is equally not a lot of reasons, unless we get those data, because we are data watchers now, all of us. Unless we get like really strong data again out of the US, then I see the yields push higher. And some watchers, Fed watchers, are now starting to think that they may not cut at all this year, which I think is a bit. I don't know. It's a little bit far-fetched. I do think that there is at least something coming this year, but if assuming that those data hold up really well and what they call the US exceptionalism is continuing, yeah, why not see those twos go just back up where the Fed funds are right now, and that is the middle is around 437. So you got another 37 BPs in the twos if we need more repricing, and that could put the tens all of a sudden a lot closer to that 480. And why not? People are thinking that we may even get back to 5% in the tens, and that should in turn put the dollar back into the driver's seat The rest of the yields in the majors is likely going to follow from a distance. We have seen that the EU and US rates are really still one pot of net, but the over the past let's say weeks, the differentials have widened just a little bit. So if that continues, then it should really keep the dollar going higher. But the thing is as well is that it's always those data, especially let's say then the PCE or even the GDP. Is it GDP as well this week, right? They can be drivers of those pendulum swings, and we've seen this bond market turn or flip around like if it was nothing, as well. So I think base case the yields are holding up, but I'm not so sure that it has to go a lot higher. But I do think that they hold up unless we start to get worse data out of the States, lower PCE, and but I think personally that the real turnaround in yields may come when we get a bad jobs report. I think jobs is really what is going to, and I'm talking about the global report, not only NFP, the overall number, you know, and with all those revisions. But I think if we get a bad report on the job front, then I think there's going to be all of a sudden a turnaround in the yields and in the dollar, I suspect.
Yeah, I think I agree with you on that front, mate. Right, I'm going to hand it over to you, mate. While I do that, just to answer Ali, one thing you're saying about gold, how can you trust the bank saying gold will get to 2,700? Well, that's your first thing. Don't trust the banks. You know, we speak often enough about what the banks have to say about things and forecasts and whatnot. So don't trust the banks. And if you're looking at correlations, have all broken down. Okay, we've been in a situation. Oil's broken down with CAD and others. You know, gold went ripping higher, but the Aussie couldn't follow for a while, so that correlation was broken. There's a lot of correlations that have gone out the window. So if you're looking for correlations, gold to the dollar at the moment, whether it's to trade gold or trade the dollar, just take them as their own individual asset and trade them individually. Don't worry about what gold's doing for the dollar and what the dollar is doing for gold. Each have got their own charts. Just trade them on their own charts. Over to you, mate.
All right, thanks, Ryan. Yeah, Angela, here we are, the 50% of the euro sterling, 50% of the move lower from which really started around year end 2023, and then we see the move higher that we had just prior to that. We are turning around this 50% right here. It's a bit of a level. I bought it this morning, just taking a slice off for the gods of FX, as I usually do. There's a bit of an interesting line coming in here, I reckon, and that is around 86.5. If that would go, then we have like this whole series of intermediate levels that we have been trading all over again, and then all the way up to 87.15. Are we pushing through? Possible, because the market looks surprised enough and seeing enough flows here right now when I look at cable as well to weigh on the sterling a bit more. So I think there is a possibility that we are going to see this level back before we have a really reassessing what we need to do. It would be kind of logic if the market needs to reprice their sterling more. That would be a possibility, and that is one of the reasons why euro dollar is also holding up. I think, as I said, together with euro yen, and perhaps some euro Swiss in there as well. That is what I think is holding the euro dollar right here in the middle of its range. Cable, this thing here looks like a bit of a, I don't know how you call it, a flag or whatever, but the flag would be the other side around, right? But could be that we have now broken below here. That's around 123.80, sorry. And then you have the 124 figure 5, of course, just above, and a bit of a trend line action. Also a little bit of activity that we saw around 124.15.20. I think those are the levels now that are needing to cap if we are to continue lower and lower. What could that mean? I think first of all, 123, the figure, is a decent enough little zone already to start with, if this move is to continue. And why not, push through 122.70. I'm not sure if there is enough to really go to 121.80, 90, let alone 121.35.50 right now. But you know how this market is when it gets its grip on a currency and it still feels that this is the soft side of things. Why not? And as I've been saying, the market likes to be a bit emotional about sterling, so why not get another leg lower? I think this week's data are going to be important enough as well. We have Pill as well talking, Pill tomorrow, Haskell tomorrow. We have the PMIs, of course, starting to come out. There's a bit of things coming our way on the sterling as well. Imagine that we see a bit of a disappointment on those PMIs, even without thinking about the Bank of England speakers. We could be heading there, okay? For the time being, so 123.80, 85, 124.55, 124.20. If that would go, or if some of those Ramsden, Bailey try to get screw back on their comments, a move back up to 124.75 or so may not be excluded. For in the mood that we are now, I would be really surprised if this thing breaks very soon again over 125. That would be a real surprise, because there's probably going to be a lot of resistance here. Short term, I think already around 124, figure 20, we are going to see offers. What else are we looking at? Hey, I was just going to have a look at this EURGBP, because this McClem guy is a bit strange, right? He was trying to tilt a bit towards the dovish side, and now his latest comments, it's not very hawkish anymore, and we are back below a bit of trendline support that we had here on the EURGBP. So I would I'm keeping an eye on it. If we get a bit of a rebound here towards the 147s, I may give it a go. If in turn we start to break below 145.90, it could accelerate a bit. And again, one of those correlations that been completely thrown out of the window is Canada versus oil, because we have seen oil coming back quite strongly lower, yet the Canadian dollar has not responded. So correlation traders, put it in the drawer for now. This is not a currency that is trading on the back of energy right now. It's really only trading differentials and other data. So I wouldn't trade it on the back of oil anymore. But forces to admit, it's feeling a bit heavy again. Okay, so I'd keep an eye on what's happening in the Euro Canada today. This is one of my other currencies, right? Aussie, Kiwi, Aussie, this is a risk-driven reversal, I guess. I haven't seen anything to... Oh, hang on a bit. My calendar is not updated. Okay, I was looking at the wrong calendar here. Sorry, guys. Did we have any Aussie numbers out today, Ryan? No.
Today, no. Wednesday, we've got CPI.
Oh, okay. All right. So we're having a bit of a rebound here. So what's happening in the Aussie between, call it 40-50, 64-40-50. If that is just a corrective rebound, we've had a little spike above here. But if that is just a corrective rebound, we can trade it lower again. I'm not going to place any bets on the Aussie right now, because I'm also looking at Euro Aussie, and that is showing a bit of weakness again. Look at this, around this trend line here. It's been traded and it's been roughly respected, and we are trying to break lower again. So after the spikes, I wouldn't be surprised if Euro Aussie tries it again below 165 at some stage. Yeah, and then we have to look at the mix, right? We had this monster scare on the geopolitics, Middle East situation, people getting forced out of carry trades, people having like those few sessions again of panic. And then we had two commentators, which are the Mexico's central bank governor, and AMLO, which we call the Labrador, was speaking again. So he's relatively happy about the correction that we've seen in the Mexican peso, because he thought it was a bit too strong. But the Mexico governor has not really been alarmed by any of this. It's all part and parcel of normal market moves. But of course, she also saw that the market has been a bit rinsed on the positions, but she's not too stressed about those moves at all. We've seen this move into the 18s. We weren't awake. We couldn't have traded it. But then we saw the rebound, and around 1740, 45, I think it's really a level now that comes back into play. If we see a rebound here and we cap again, I think we can start to go lower again. It could also already be around 1715 or 1725. That is possible as well. I haven't traded it yet, but it looks to me like the major scare is over once more. And we have seen it in the Euro mix as well. And while I was off on Friday afternoon, we've seen a retest of this 18.5, and it's capped again. So that brings this trend line, this channel back into play, in my opinion, after the panic and people looking for liquidity where there isn't any spike here. But once the panic settled down a bit, 18.5 seems to cap it again. And I think that may be a decent level if we get anywhere close to try it again, for me at least. I may already try it in 1830 and then build up to this 1850 zone. But of where I'm sitting, this scare looks to be sort of over. Anything else before we close the books? I think it's okay for a Monday morning.
Yeah, we can call it a day, mate. I think that's
yeah.
good enough.
Yeah,
thanks, mate. Yeah, we shall leave it there. Hopefully we've got you set up well enough to know what's coming this week. Lots to look at and lots more to discuss, which we shall do so over the week. Have a great trading week, everybody. Have a great day today, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.